The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we kick-started the week on Monday, a little bit of green in corn futures, soybeans pretty quiet around unchanged, some pressure in the wheat markets, and a nice rebound in cattle futures to kick off the week. It was a tough one in cattle country last week. Both cash and futures were under some pressure. Let's talk about it. Joining us now for market analysis, John Heimberg with Total Farm Marketing. John, good to catch up. Hope you had a nice weekend. Thanks for being with us today.
Yeah, I'm glad to be back. Obviously, Super Bowl weekend, came and gone, and fairly uneventful game, I guess, and especially for us Packer fans. But the Eagles are definitely the more dominant team there yesterday, and kind of had that game pretty much over by halftime. So, but
pretty much so.
Yeah, scheduled to watch a good game and kind of got a clunker.
Well, in the case of my wife and my in-laws, who are huge Chiefs fans, it's a day of mourning for them, and hopefully all will be right in my household here after a few days of mourning of that tough one on Sunday night. Well, hey, looking at the markets, they could have been a bloodbath like the Super Bowl was, but they weren't really on Monday. Kind of quiet in the grains and oilseeds overall, John. Even the corn market finding a little bit of strength. It feels like largely we're headline driven right now in these markets outside of any other fresh news. Would you agree?
I would say so. I mean, that's probably some of the volatility in terms of the kind of Trump trade, to talk about it again. And you just don't know what's going to pop up during the course of a day. And I would agree with you. Today just felt very, very blah in terms of energy. We saw a nice little recovery in the corn market off some of the lows. And, wheat just really never found any traction. And soybeans just kind of ground around all day today. So there really didn't seem like any true action in the marketplace. Maybe some of it is just, we do have a USDA report coming tomorrow, and typically February is not that big of a report in terms of numbers and new information. It's more some line item adjustments, and you look at the analyst expectations, we're not expecting a whole lot of changes. Maybe the biggest thing we'll watch is what do they do with some South American numbers now that harvest is starting to kick in for Brazil in terms of those beans, and then obviously the Argentina weather. Do we see some adjustments there? I continue to hear talk of very good yields in Brazil. That maybe that crop's not a 170, maybe it's a 175, and we saw some analyst groups down there put that number out there or close to that yesterday. So a lot of things still moving out there, but overall today, like I said, fairly quiet day. The only thing that was kind of interesting to see was the strength in new crop corn today, actually being the leader of the corn market higher was these 25 corn today.
Well, you wonder about a move like that with new crop, and I know we've seen a lot of farmers selling here on this rally in the old crop, and maybe even working some positions in new crop corn as well. I mean, what are your thoughts here as I think we've worked through a lot of the farmers selling of old crop supplies, and some folks are maybe starting to turn their attention to new crop contracts. Plus, I know we're setting the crop insurance price here in the month of February. So there's a few balls being juggled here, so to speak, right now in this grain market.
Yeah, one thing we've been really talking about and watching is the spread action. And, right now you're still looking at a July contract that's trading 30 cents over the December, 30 cents plus. Now that spread kind of looked like it peaked out here a little bit over 40 cents here a couple of weeks ago. So, is that something that either July is overvalued and needs to come down, or December is undervalued and needs to come up to tighten up that spread? Typically, we run in a carry type market in that regard. But with the current demand pace where it is, today saw that another good sale of old crop corn to Mexico today. The thoughts tomorrow we could see carry out even come down a little bit more, not a lot. We're talking maybe 10 to 15 million bushels tomorrow for expectations of cuts in terms of that carry out. That spread's allowed itself to be bull spread, and then so maybe we're just seeing some squaring up on that spread a little bit here, maybe adding a little bit of value, making sure those acres are out there for next fall. So that's an interesting one. It's one I've been kind of watching, and that July D spread looks like it's kind of maybe hit a little bit of a wall, and we'll see if it can continue to crack back here. Again, one of two ways, which is either July is coming down in value or that December is going to lift. And that very well could be what we saw, at least some of that spread action today with them buying that back month, December. And September was also a big mover today versus the front months.
You look at that soy complex as well, and I know the tariff concerns are there. Does China retaliate by putting on tariffs on U.S. soybeans? Hasn't happened as of yet. So I know that's been kind of lingering in the soy complex as a whole, but yet you look at the board action, pretty quiet Monday, these 1050 to 1080 range in new and old crop contracts. I mean, still some pretty solid price levels in soybeans, John.
Given where we are in terms of the global situation, again, like I said, that might be the more important numbers tomorrow. Do they make any adjustments at Brazil? I mean, currently they're at 169, they being the USDA. Again, we got analysts and most of the trading community think it's above 170. Do they start working themselves up to that number? We'll have to see. And then on top of that, obviously, too, we're watching the demand side on the soybean side as much as we can here, as corn demand continues to stay relatively strong, and that's supporting that market on the front end. We've seen that carry out continue to tighten. Soybeans might be a little different story in that regard, as also sales seem to be drying up. Some of the South American beans are getting a little bit more available. They've had their logistics issues with that big soybean crop, and now here comes the bulk of that crop probably over the next 60 days or so, which really can put a lot of pressure on the soybean market. Add into the fact, too, that even export inspections are kind of getting into their window where they start backing off a little bit, and sales definitely are backing off with the supply coming at us. So, bean market today being unchanged really was more of a consolidation day. We had the rough close on Friday. Kind of got a bit of a downtrend. We're sitting on some really key support here around this 1045, 1046 window. Trend line support that breaks, I think you could see a very quick move of 20-25 cents to the downside to the next level of support. So a little more cautious in that bean market right now. We're just getting in that window where U.S. demand is starting to tighten up. Supply side is growing, and unfortunately that's not going to be very good for prices here if that does kind of continue to be the path that we want to follow.
What about this wheat market trade? That was really the downside leader on Monday. It felt like we had a day or two last week where we found some technical support in the wheat markets, and then it felt like Monday we kind of lost some of that technical support here across all three complexes. What's your feeling in the wheat market right now, John?
I kind of like the wheat market where it's at. Now, we've had a good run. Last week up into Friday, we had a pretty good move higher, put a little bit of a reversal on Friday's chart. So it feels like we just had a little bit of technical selling today, maybe just squaring up some of those positions in front of the report tomorrow. Again, like I said, even though we're not expecting a whole lot of number changes there, I could see this thing come back and test some support, maybe another 7, 8, 9 cents down if it wanted to. We crossed the 100-day moving average, and that's right about that level. That's a pretty key spot that it wouldn't shock me to see a market, let's put a run in from 530 to 590 in a matter of a couple of weeks and walk back, 15, 20 cents and see if that holds. So, but right now, at least the path of the wheat market just seems a little bit more friendly. This, again, we're talking money flow, things of that nature. They're sitting on a fairly large short position in wheat. Again, counteract that with a big position in corn on the long side. Just kind of feels like wheat's undervalued. Now, again, there's another spread that we've been talking about and watching is corn versus wheat. A couple of weeks ago, that got down to about 60 cents between, with corn versus wheat in terms of value, which is historically narrow. So maybe we're seeing some movement there. We're walking away from corn positions, walking away from those short wheat positions. That spread now traded up to about 90 cents on Friday, back in the upper 80s with the close today. So it just tells you that all of a sudden that maybe there's some value things that are moving around in this market on the spread side, which leads us to a choppy market, very much like we saw today in terms of how it traded.
Does it feel like some money's maybe flowing into the outside markets right now? Stocks, some green there Monday, gold up almost $50 an ounce, crude oil up 1.5%. Are we using some of these outside markets, especially maybe gold, as a a bit of a safe haven away from the ag commodities, John?
I think so. I think there's a little bit more to the gold story than what we're than's out here as we again pushing to new highs again today. Big move in that gold market. Again, that's probably a little bit more of a safe haven against some of the issues going on globally. Are we seeing some economic slowdown? Okay, things are getting lofty. Let's go back to something that can secure our money a little more. And gold is that typical trade. Seems like the precious metals, gold and silver, are starting to get a little bit of obviously getting some bid here and counterpoint of that. So we'll have to kind of watch how that plays out. Again, is that a little bit of an indicator of something bigger coming if down the road? So there's some things that I've been antsy about in the markets in general, as I'll just say, and that flight to safety in gold makes me kind of a little more cautious than it does excited, just because something bigger might be brewing. But again, I think we're just seeing some money want to come back into the markets in general. They've been buying the grain. Stock market's recovered off its lows. Good money flow in the crude oil with the turn on that market today as some of the values maybe just got a little out of place and crude became a little cheap here. So, so we'll have to see how things kind of play out. And again, if you're talking about a big position in one area or another, it just might be a spot where they balance the portfolios and move that money into other areas just a little bit. So it's going to get very interesting, I think, in the next few weeks here, just to see how things continue to work out as we move further. But now we're kind of into the doldrums of winter a little bit here, where the news starts definitely in the grain markets getting a little more quiet.
John Heimberg with Total Farm Marketing, our guest analyst here today on Market Talk. Let's go over to livestock trade. Let's start with cattle. It was a tough week all around last week. Futures, cash, you name it. We found some pressure, but here we are Monday. Futures, both fats and feeders, a nice rebound with feeders leading the way. So do you think it's a short-term correction we saw last week? Are we getting some value buying in at these little bit lower levels here? I mean, what's your thoughts on this Monday cattle trade action?
I'm a little cautious right now. We've seen the funds started to peel back some of those longs. They're a record long 2 weeks ago on the commitment to traders last week, down about 6,000 contracts as of Tuesday the 4th. So we've got a little bit of money flow maybe leaving that cattle market. We lost some momentum in the cash trade. We lost some momentum in the retail trade. Now retail's popped up a little bit, a couple bucks on choice carcasses, to start the week today. The overall fundamentals are still very, very friendly, but we're right on a consolidation point. In fact, we actually broke through a trend line on Thursday, retested it yesterday and today, and held it on the upside as resistance. So to me, it kind of feels like we got a little bit more room for this market to maybe slide lower. On just momentum trade, I'm targeting in that 193.94 window as the next kind of line of support. That puts us back on a trend line. That also comes back to where we kind of broke this thing out after Christmas, and maybe a logical point here. But with that, I still like the longer term picture in cattle. We'll see if that can, and I think if we get another correction back, and if we get down to that area, you're talking $15 off the high. That might be a spot to even start thinking about reowning any cattle that you move there, because that fundamental market is still very supportive overall in this cattle space. Jumping over to hogs, I mean, choppy day. We're kind of at the top of the range here in hogs. I had a chance to push through it on the open this morning, just ran out of gas. So it feels a little bit more technically driven here. That hogs are hitting the top of the range here in April, as well as in the summer months, that maybe we get a little bit of a rotation back down to the bottom of the range again, where, this market's trading about a $6-8 range at this time frame, and there might be some opportunities there if we get back down there. I still like the meats. I like the proteins, but we're just in the doldrum time. We're not thinking about grilling demand, and we're kind of past the holidays. If there's a spot for a market that may be overvalued, like the cattle market is, at least in terms of historical value, not so much maybe the fundamentals are still supportive, that maybe we just see some money bleed out here, and so we can set ourselves up for a little later in the winter as we get ready to start talking about grilling demand as the weather starts to warm up.
Yeah, that summer BLT seasonal is we sometimes refer to it here on the show. I thought it was interesting that the pork cutout value Monday was up almost $4, but really didn't help hog futures. And then on the cattle side, I know last week we were 1 to 2 lower in the north and south on the cash trade, but still these cash markets in both complexes, continue to, in many ways, they've, throughout much of last year, they kind of tend to lead these futures markets here in the proteins, John.
Yeah, and that's really the driver. And, one thing I didn't add in, and today was also first notice day in that February contract today. So people long that one had to be out or risk delivery. So that's something to bring some volatility. And we just had options expiration on Friday, for February options. So that could have been some of the strength that we've seen the last couple of days. It's just the market reshuffling its positions with those types of events coming at it. So, but again, it's just like I said, getting to your point though, it's just, we've got some markets here. They're driven by that cash market. Like I said, in hogs, a little disappointed to see the lack of energy with the positive news, at least on the retail side today. Cattle markets, if that cash trend stays softer again this week, obviously, I think that wakes up, pushes the market down a little bit here as we just, again, might be a spot where we just take some value out. But I think to me, it takes value out and provides an opportunity, something we want to kind of start thinking about going into the summer months, because those cattle numbers just are not out there. And then, you saw that in the cattle inventory report here a couple of weeks back. Expansion is not in the cards yet. It's actually still in contraction phase. So there's just some things out there that still signify that this cattle market may not be done here, but we're at a spot I think it has a little more room for a pause.
Quick notes in the dairy trade before we wrap it up here, John. Anything you're watching there this week?
Again, just we're driven by cash cheese and what's happening in terms of those products now. Maybe we're kind of past the pizza season now that football's done. March Madness is right around the corner, though,
True.
So we'll have to see there. But that still seems to be the driving force. You got a milk market, at least in terms of like that March contract, kind of maybe hit a bit of a wall with this latest move up, and now we're kind of chopping back and forth. So again, I think we're a little bit range bound here until we get a clearer picture when we get into the summer flow in terms of the milk flow. But cheese prices are going to be the dictator of things, and as well as the butter prices. So again, we get up in the 20s, I'm a seller. If we get down in the mid 18s, like we kind of just did here with that, March, April contract, then I'm probably going to be a little bit on the long side or looking to make sure we're readjusting some hedges and taking some value out.
John, any final thoughts for folks? Anything you want to reiterate before we close it out today?
I know prices may not be still where we want them in some markets. Some markets still have great value in them. Just continue to be active, ask questions, assess where you are in your risk management side of the portfolio. Make sure you have something in again, because we've just proven it with a headline here, a headline there. Things can move extremely quickly in these markets. Excuse me. So if with that something comes up and it's the wrong way, especially where some of these markets are positioned with money flow, it's going to be real easy for them to pull positions out and could really see some big swings. So make sure you're just being on top of things accordingly and to that according to what you need in your operation.
John, if folks want to reach out, have a conversation with you at Total Farm Marketing, how can they get in touch?
Love to chat with them anytime. Give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. Don't forget that website of ours, totalfarmmarketing.com. Just got any questions, just feel free to reach out. I always love talking markets, talking chop, whatever's on your mind. See if I can give you any information that could help you out.
John Heimberg with Total Farm Marketing. Always good to hear from you, my friend. Thanks for joining us on Market Talk. Have a great week. We'll talk to you next week.
Sounds good. Have yourself a great week.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.